I'm Erin Aid. This is Boom Bust, and these are some of the stories that we're tracking for you today. First up, the SEC is looking into mutual funds that look like hedge funds and call themselves alt funds. So what are these funds? We're going to look into it ourselves, coming right up. Then the latest addition to the Boom Bust team, Bianca Fascini, is on the show today. She's bringing us her report from the Black Hat Cybersecurity Conference. And in today's Big Deal, Redacted Tonight host Lee Camp is sitting down with me to talk about the privatization of prisons. It all starts right now. You've heard of alternative music, alternative culture. Heck, you're even watching alternative media. But now we have alternative mutual funds. Yep, welcome the alt-mu few. Now, while many investors are embracing these liquid alternative funds, the Securities and Exchange Commission isn't so keen about the whole phenomenon. The SEC has launched a broad examination of alternative mutual funds in an effort to scrutinize one of the hottest and most controversial investment products offered to small investors today. Alt funds, or liquid alternative funds, have marketed themselves as a way to hedge against market risk by employing hedge fund-like strategies, such as betting on some stocks and against others, trading futures, and using derivatives to increase leverage. They're also a cheaper way for individual investors to gain access to strategies once only available to sophisticated investors. Now, critics say that alt funds are just watered-down hedge funds, and individual investors might not completely understand what they're getting themselves into, quickly finding themselves in over their heads. So far this year, investors have poured roughly $16.8 billion into these types of funds. And with their surge in popularity, the SEC is focusing their inquiry on the liquidity of the funds, their use of leverage, and the degree of oversight provided by the fund's boards. So to give you a better example of how these funds have grown so quickly, when AQR Capital, now that's a pioneer in the space, launched its first mutual fund in 2009, it managed $20 billion. By the end of June of this year, it was managing roughly $113 billion. That's a significant jump. Other firms like Goldman Sachs, Blackstone, and Bank of New York are boosting their offerings in the space as well by launching their own alt funds. But not all funds are on board, and many financial advisors say that they won't offer alternative funds because of the complicated strategies involved in managing them and their lack of long-term track record of success. We just don't know. They're brand new. Now, my take, if it looks fishy and it smells fishy, it's probably fishy. So buyer beware. Now, our next guest is definitely not afraid to speak his mind. I recently had the chance to speak with Peter Schiff, a Boom Bust favorite and CEO of Euro Pacific Capital. Now, Peter believes that the current housing market is a bubble and says if something doesn't give, the country could be flooded with homes that no one wants to buy. Take a look at what he had to say.
I think this echo bubble that the Fed has reflated in the housing market is already beginning to lose air. And the main difference between this housing bubble and the last one is the last one was more of a Main Street bubble, and this is more of a Wall Street bubble, because the principal speculators are hedge funds and private equity funds and very high net worth individuals who are paying all cash for properties and buying them on the anticipation of selling them at a profit or renting them out to all the Americans who can no longer afford to buy. But I also think this is a bubble. I think a lot of the real estate that was snapped up in foreclosure auctions, I think people overpaid. And I think the investors are just now beginning to realize that they overpaid. So I think the speculative buyers are leaving the market, and there's nobody to fill the void because the real buyers are absent. In fact, if you look at the recent home statistics, the percentage of homes bought by first-time buyers is at a record low. And in fact, home ownership among individuals is at generational lows. So prices have to come down dramatically from here before real buyers can actually afford to buy all the properties that have been bought by speculators. And at some point, the speculators who own these properties, if they can't collect enough rent to cover the cost of ownership, they're going to be selling these properties. And look out below, because when they put these properties up for sale, again, there's no buyers anywhere near the current prices.
So you're saying that speculators overpaid when these homes were in foreclosure? Is that correct?
Yeah, well, initially in the process, they probably got good prices, but then the prices began to run up as the supply of foreclosures was dwindling and more speculators wanted in on the action. They started bidding against each other, and prices were too high. And some people might have looked at prices and compared them to where they were at the peak of the bubble and said, well, I'm getting a 20 or 30% discount, so it's still okay. No, when you're talking about a discount to an inflated price, you can still be paying an inflated price, especially if you look at what the potential is to rent these properties out. Because, you know, the rents are not going to be there. I think a lot of people misjudge the market regarding how much they could actually rent these houses for, because it's very difficult to rent a single-family home. A lot of renters don't want them because there's a lot of other costs associated with it, and I think it's going to cost these hedge funds a lot more money than they think to manage all of these single-family homes. It's going to be very difficult. I think they've bitten off a lot more than they can chew, and you know, a lot of these investors, they paid cash for the properties, but that doesn't mean they're not in debt. They might have borrowed the money through another source. They don't need a mortgage, but they still had borrowed money that they brought to the auction house. So they still have a lot of debt. And if interest rates begin to rise and they have to service this debt, but they're not getting enough revenue from their rental income, they may be forced to put these properties up for sale. But again, if all the speculators want out, who's going to buy? Nobody.
Peter, treasuries have been doing pretty well with the 10-year hovering around 2.50 level. So do you see this low yield lasting? And if not, what impact do you think an uptick in yields would have on the real economy?
Well, first of all, a big uptick in yields would be devastating for the phony economy because it would prick the bubble in stocks and real estate and force a lot of banks to fail, and we'd have a worse financial crisis than 2008. But it would liberate the real economy. I mean, the real economy is being stifled by the low interest rates and what the Fed is doing. So beneath the surface, it would be very positive. It might be painful at first, but ultimately it would be a pain that would be beneficial. Because it would lead to some long-term gain. But I think the main reason that we haven't seen a bigger increase in interest rates since the Fed began tapering is because foreigners have come to the Fed's rescue. If you look at the increase in buying of treasuries from China, from emerging markets in general, from Europe, look at Belgium, for example, you've seen this big increase that has offset the reduction from the Fed, which again they announced today. They tapered back another $10 billion, and if it wasn't for all these foreign central banks, we would have had a more dramatic impact on rates as a result. The question is, how much longer can we count on this support from our friends, especially when we're pissing off so many of them with our foreign policy?
Now, many believe U.S. shares are priced to perfection right now, with the S&P 500 having hit 27 record highs this year. So some American investors are diversifying into cheaper international shares. Do you recommend that move, and why or why not?
Well, I've been recommending that for years, and I've been following that advice personally. Yeah, I think that people should be invested in the stock markets. The question is which markets, which countries, which sectors should they be focusing on, because they're all not the same. So I do believe that there are certain markets that represent a lot of value, where the stock prices are not inflated like they are here, where you get a lot more value for your money. You pay a lower PE, you get a better dividend yield, and you have better prospects. I think here in the United States, you're right, there's a bubble going on. And in fact, beneath the surface, if you look beneath the averages, a lot of stocks so far in 2014 are in bear markets. There are plenty of stocks that are down more than 20% on the year. There are a lot of stocks that are down 10% to 20%. There are some stocks that are making new highs, but it's not that many when you look at the overall market. And a lot of it is based on share buybacks that are financed by cheap money, and it's the low interest rates that make possible the valuations and some of the inflated earnings numbers. So that if interest rates were to go up, that would completely knock the rug out from under these stocks, because not only would it reduce their earnings dramatically, because they would have to pay more interest cost on all the debt that they've accumulated to buy back all these shares, but it would also impact their revenue, because their customers, who also are levered up, they would have to spend more income on interest payments, so they would have less to spend on their products. But now higher interest rates means that you have to discount those future earnings by a bigger number, so the multiples have to contract. So there's a lot of room beneath the market, unless, of course, the Fed comes to the market's rescue with an unprecedented amount of money printing, which I actually believe is what's going to happen.
That was Peter Schiff, CEO of Euro Pacific Capital. Time now for a quick break, but stick around, because when we return, RT producer Bianca Fascini is telling us about staying one step ahead of hackers and how it's a hard thing to do for even the most seasoned cybersecurity expert. And in today's big deal, Redacted Tonight host Lee Camp is sitting down with me to talk about the privatization of prisons and a little bit of Walmart stuff in there as well. Plus, remember, you can see all segments featured in today's show on YouTube at youtube.com/boombustruT and on Hulu at hulu.com/boom-bust. Now, before we go, here are a look at some of your closing numbers at the bell. Come on back with us.
I would rather ask questions to people in positions of power instead of speaking on their behalf. And that's why you can find my show, Larry King Now, right here on RT. Question more.
Are you like me? Do you want your comedy news with some teeth? Want your comedy news to be a bare-fisted, no-holds-barred fight to the death? Like a truth vampire biting into the necks of the corporate elite and the billionaire freaks while they're going, make it stop! Well, that's what you get with my new show, Redacted Tonight.
Is that too much? I think that was too much.
Welcome back. Now, computers, smartphones, tablets, we use them for everything these days. But just how secure are your electronics? Last week, the Boom Bust team attended the Black Hat Conference in Las Vegas, and it's a meeting of the best collective security minds on the planet. And what we learned there is that hackers and thieves seem to always be one step ahead of security, which certainly isn't good for any of us. Bianca Fascini tells us more. Bianca?
Experts from around the world recently gathered at the Black Hat Conference in Las Vegas to discuss advancements in technology and information security. In the post-Snowden era, meetings like this explore some of the most pressing issues of our time, like whether or not privacy is at all attainable in the digital age. The Black Phone, the first allegedly fully encrypted smartphone, was hacked after one expert at the conference found 2 new flaws in the device. And this comes after a recent study released by Hewlett-Packard that claims 70% of smart devices, ranging from TVs to home thermostats to automatic door locks, have security vulnerabilities. All of this begs the question if the so-called Internet of Things, where essentially any object can have an embedded computing system, is really for our benefit. Kimberly Price, the director of SYNAC's Red Team Strategic Operations, suggested the Internet of Things might be spying on all of us.
Maybe my refrigerator has embedded software in it, and they know things about my eating patterns. Does that really matter? I don't know. But if we're talking about embedded healthcare systems where I could, a couple of years ago there was some research done where an insulin pump could be remotely hijacked to deliver a fatal dose of insulin, that's a problem. That's a security issue with life and death consequences versus a privacy breach. And so we have to be looking at these very realistically in terms of real world impact, and not, if we overreact to the small things, and I'm not saying we shouldn't react, but if we overreact to them, then we're going to be immune to the things that really do matter.
It goes beyond your home, car, phone, and computer, though. Vulnerabilities were also found in airport scanning equipment, allowing hackers to potentially manipulate their vital functions. Security researcher Billy Rios claimed to have found the flaws in 2 TSA-approved pieces of equipment. It's hard to imagine chaos in the airports if hackers could take advantage of these flaws, especially for a security system that's undergone so many changes since 9/11.
Some of the stuff about automotive hacking. I don't know of anyone actually hacking cars right now, but getting onto that quickly so that you can be prepared if it does happen is something we need to do, rather than to learn the hard way that we should have.
While the list of potential vulnerable items, both big and small, continues to grow, researchers at Black Hat say prevention is key and should be the plan to focus on going forward. In Washington, Bianca Fascini, RT.
Now, aside from security and privacy concerns, we also made an effort at Black Hat to get some perspective on the financial markets and tech industry as well. Now, you heard a little from Kate Pierce a moment ago in Bianca's report, and she's a security consultant at Neo Hapsis. I sat down in Vegas with her to learn a little more. I first asked her how well encrypted the New York Stock Exchange, NASDAQ, and other massive market exchanges are today. Here's what she had to say.
Some of the stuff they encrypt is very, very good. Some of it is optimized for other things, whether that's speed or like easy reconciliation. In the end, security is a business cost, and it's a business benefit, and it can't be everything. If it becomes everything, it stops you doing what you need to do. And so there is that balance. But it's such a generally an insular community at the technical level that, to an extent, their protections aren't technological. They're whether you are on the in-crowd, whether you're approved to deal on various networks. In the same way, if you're a financial who can't get on the SWIFT network, that's a problem. But once you're in, and they've vetted you, you've got a lot more freedom.
I want to switch gears a little here and talk about women in the STEM industries, which is science, technology, engineering, and mathematics. Now, a recent study says that women account for only 24% of those in the STEM workforce. So, how do we encourage women into this field?
You stop discouraging them. And I was very lucky in that I missed that discouragement because I transitioned gender a couple of years ago. And until that point, I was one of the dudes walking around. I was blending in to this sea of men. And in my industry, it's even worse than STEM in general. STEM in general is around 30%. I have seen numbers that are 15% for my industry. And when you take out the people who are in management or in the softer jobs, it drops even more. And that's terrifying. So there's a couple of things. There's, yes, don't discourage them when they're girls. It doesn't necessarily need explicit encouragement. Just don't set up those false expectations. Don't tell them that they're not cool for doing that. Now, the other part, though, is when they get in, often the career trajectory isn't there. Not so much a glass ceiling as they never get on the elevator. So I've seen this with some of my friends who are in biology and academia, where all of the postgraduate students coming through are like 60–70% female, but the faculty is almost exclusively male. And when they hire, they largely hire men. And that's odd. Maybe I'm just being paranoid, but there's something funny there. And all too often, I get people saying, oh, but it's all about merit. It's all about merit. Well, every meritocracy I've seen tends to devolve into an oligarchy.
You just mentioned that you noticed a change when transitioning into a woman. So what are some of the more prominent changes that you noticed from the workforce and community?
I've been very lucky in that I've missed most of the worst ones. Most of the differences have been having to justify myself more, having to deal with not being presumed as an expert. If I walk in, I have to prove myself in a way that I didn't have to previously. And that is frustrating, but also a lot of fun when people don't expect it, and I slam them down and make them feel insufficient. That's great.
You also mentioned that some people in the industry just presume that you're in HR or marketing, no?
Depending on how I dress, yeah. Go out there and walk up to any random man and say, so, are you in HR? And they'll go, huh? But then again, also, if you have social skills, they presume you're sales or marketing. If you're not hiding back going, then you must be in a soft job, because if you're a technical person, you wouldn't waste time with that. But people also use their lack of social skills as an excuse to be rude, or to get away with things they wouldn't get away with elsewhere. And that is very discouraging as a woman. I haven't been socialized to put up with that. I haven't been socialized to accept it, and so I don't. And people find that jarring, but I'm here to live my life. I'm not here to be pushed around by people who are being idiots.
Dr. Kate Clancy, an assistant professor at the University of Illinois, recently published a study, and the statistics basically say that the number of women in the STEM workforce are being sexually assaulted more. That statistic is going up, and this is just yet another obstacle for women to have to face in a male-dominated workforce and a male-dominated environment like the STEM jobs. So does this problem deserve a thoughtful response, kind of similar to the way that organizations are trying to encourage young girls to apply themselves in science, technology, engineering, and mathematics?
So partially it's that, but a lot of it is also the nature of the industry of academia. It's all about your networks, the people you've worked with. You need them, particularly early career, to build your own credibility. And if they do something to you, you're not in a position of power. Sure, you could take a lawsuit, you could push something to HR, but when you suddenly lose your collaborators, that can ruin your career, even if it wasn't explicitly because of that. People just think you're making a fuss, and that's not okay. But we do see that in other places too, but in STEM, particularly the way you don't publish on your own, you don't do work on your own. It's always a group of people, whether it's the people you work with directly or the people across the country or across the globe, and you need to keep them on side. And maybe if men started getting sexually assaulted more, then we'd actually start to see some change. But until then, we have to work out how do we deal with that. So in the same way that a lot of women publish with their first initial rather than their first name, because then they don't hit the gender bias in the same way. That shouldn't happen. But you see the same thing with resumes and studies where people send out a resume with Mr. on it, or a first initial instead of a name, and suddenly they get more callbacks. You can't prove anything, but the correlation is suspicious.
That was security consultant Kate Pierce. Time now for today's Big Deal. Big deal time, and I'm joined today by the wonderful Mr. B. Cannon.
I'm the big deal?
You are the big deal. You are a big deal, my friend.
How'd this happen?
Now, today we're talking about private prisons. So here's the deal. 3 major companies, Scopia Capital, DSM, and Amica Mutual Insurance, have made headlines for denouncing their multi-million-dollar investments in the private prison industry. Now, the move comes after an effort made by Color of Change, a nonprofit organization, pressured companies to divest from private prisons in light of exploiting men and women of color. So, Lee, should corporations that, operate in the public sphere, like public prison systems, be allowed to trade on public markets, or is there a conflict of interest there?
I mean, yeah, I think it's gross. I think it's because they're deciding on people's lives. These prisons they lock people away for God knows how many years of their lives, and they pressure politicians to lock them up longer, to keep them in jail longer. I mean, we have 3,000 nonviolent prisoners serving life in prison in this country. We have 5% of the world's population and 25% of the world's prisoners. I mean, if we keep locking people up at this rate, who's going to be left to wear the Snuggies and play the video games? No one. Who's going to wear the Snuggies?
Who's going to wear the Snuggies? I don't know. Maybe the companies that are getting paid for each prisoner they inhabit. I mean, it's terrible, but Scopia, I want to talk about them because they're an alternative asset management firm, and they're based in New York City. They have $4 billion under management, and they have other assets under management. They're in real estate. They do other things, but one of their most profitable sectors is this private prison industry. So, why do you think it's such a successful business model? Does it have to do with the fact that it's kind of like a recession-proof industry? What do you think?
Yeah, their stocks are doing great. The corrections corps are doing great. But it depends on how you measure success, right? Right now, we're only measuring success with profit. What if we measured success with the number of prisoners rehabilitated?
Right.
Or the number of prisoners that didn't get, because there's more violence apparently in these privatized prisons and less rehabilitation in these privatized prisons. So it depends on how you measure success. Maybe we should measure it on how the Yelp reviews are by the prisoners after they leave.
There you go. You want to know something crazy? I'm glad that we're talking about this, because in Singapore, they still have corporal punishment where they have caning, and it's kind of funny. I mean, from a Western perspective, you're reading this in the paper, so and so got 6 lashings, but the recidivism rate on that is extremely low. So for us to say it's barbaric to do this, but at the same time we blow, execution
You heard it here
jobs.
first. Bring back caning.
I'm not saying bring it back.
No,
Let me just make this clear. But it is interesting because cost-wise, it's very cost-effective, and you have the option to go in prison. You don't have to be.
But I hear what you're saying in the sense that, like, we find that so barbaric. We're locking someone up for their lives for
totally okay.
small drug crimes is insane.
Yeah, it seems kind of hypocritical. Depending on where you stand, it can go either way. Now, private prison companies, they're more operationally efficient than public prisons, and furthermore, why is that? And should they be more operationally efficient? Is it because they have the luxury of not caring? They don't have a public. They're not responsible. They're not public servants, so they're not responsible for the public's opinion. Do you think that's why?
Right, efficiency. Well, Dexter is efficient, right? He's quite an efficient guy. I mean, prison labor in China is efficient. I think that efficiency can't be all you measure. But yeah, they're measuring. They're not trying to rehabilitate somebody. They don't. Right. They just want to retain them. Like the number of prisoners. A lot of states, several states, I think it's maybe 9, have signed contracts to these private prisons saying they will have like 90% fill these prisons at all times.
At all times. That's like hotels don't have fill rates that way.
Yeah, exactly. So they've signed contracts saying we are going to lock people up for you.
That's incredible. Now, finally, I have 2 seconds left. Well, 30, but I want to talk about Walmart. Can you tell me what's going on there? There was a leaked memo from Goldman Sachs. You know all about this, so quickly give us a heads up. And it's going to be on your show this week, too.
Yeah, we're covering Unredacted this week. Walmart, Goldman Sachs said that Walmart is on the decline and should continue to be on the decline. And apparently they're losing out to smaller, more convenient stores, and they listed dollar stores as one of them. And how crappy does your stuff have to be to lose out to dollar store? Like most dollar stores, they have like repurposed ramen noodles and like stolen shampoo bottles, and like that's what they have. And usually
pregnancy tests.
Off-brand pregnancy, electrical cords that say Feliz Cumpleaños on them.
Lee, I love having you on. It is really fun. You have to come back more often. That is Lee Camp, host of Redacted Tonight, every Friday, 8 p.m. Check it out. It is truly awesome here on RT. That's all for now. But please check us out on Facebook, facebook.com/BoomBustRT. And please tweet at us at Aaronade, at Lee Camp. From all of us here at Boom Bust, thank you for watching. We'll see you next time. Ciao.